it's kind of slow. We don't look for a breakout right away, but the way it's building and consolidating and just sitting there around 13.13 to 13.15 for gold and around $16.50 an ounce for silver, I just continue to recommend accumulation. But what I want to do today is, doing this on Wednesday, May 9th, 2018. I had a writer say, I wish you would say what day you're doing it, where I can, when I catch up, I know what the time frame. So hopefully this will help a little bit. But let me get right to real stories, because this is important. About 3 years ago, a client called and priced up with us and priced with another firm that is a very respectable and good firm. And I said, so they're one quarter of 1% lower on the front. And I said, they charge you a back end to sale. We don't charge a back end fee. So you've got to look at a round trip when you're talking about buying. You need to know what it costs you to get in, what the company's going to make, they're selling it to you, what they're going to charge you to get out, if there's commission. Now, in our case, we fully disclose we make 2.5% on gold, 3% on silver. We pay the shipping and insurance, and when you go to sell it, we charge you nothing. So this call comes in literally today and says, and it was over 9,000 ounces that were purchased. So now they're going to charge them $1.25 an ounce, over $10,000 to liquidate the silver, that if they had bought it from us, they would have no back end fee. And overall, we just got through figuring it, they'd be 9.25% better off if they had bought it from us and paid 0.25% more on the front than buying it. So this is unbelievable. And it's what I've been telling people, because we sincerely haven't done this 42 years. I do this because I say sincerely, God wants me to do it. The reason I'm still working and loving it is I feel that's what I'm supposed to be doing. And I feel good every time we sell something to somebody and we can give them 100% of what we get. And nobody else does that I know of. I also had a call last week, and they were saying, have you ever looked on the internet at such and such company and how many complaints they have? They said, we looked on the internet and National Numismatic Associates has 0 complaints. And so we looked at this other, they had over 233 complaints on the internet for the very things as misrepresentation, calling the premium, putting their commission in and calling it a premium, when by definition, we've talked about many times, when you buy something from us, you pay spot plus premium, what costs me, plus our commission, so to get your final price. And these big companies, telemarketers say, the premium on that this week is this. Well, it's really not. It's a premium plus their commission. So we're just trying to help you get ready, because let me promise you, I've been doing this 42 years, and we're going to have the biggest move next time. And I don't think it's far away with the gold cryptos being developed. We're seeing central bank purchases out the kazoo. We've just joined the pool. If you are a $100,000 or more investor, you need to call us about a no charge for storage program we have, but it's a $100,000 minimum. But give us a call if you want to talk about that. And then certainly we have the lowest storage fee in the world. My little company can give you the lowest storage fee. We do not mark up storage like other companies do. We want to get you lowest storage in the world with no markup, and that's what we do. And then when you sell it, there's no charge. And then lastly, I want to just touch on this gold-silver ratio for the ones of you who haven't been around it your whole career like I have. There's different ratios out there. When people say you should buy silver when the ratio gets above this, and you should sell silver when the ratio gets below this. So let me go through them real quick, because I don't have time to elaborate on them. But there's the ones out there that believe 16-to-1 is the real ratio. And to go back, and that's the 32. When gold first started trading freely back in 1971 and 72, gold was at 32 an ounce, and silver was at 2, 16 to 1. And that's the way it started out when gold was allowed to trade in the free market again. Then you go up to the 32 to 1, and that is gold over just a dollar, a silver dollar for a dollar, even going back further. So then you come up, the one that we see used the most is 50 to 1, where in 1980 we saw gold get 800. It actually got higher during the midday, but closed at 800. Silver was at 50 during the Hunt brothers. So that was 16 to 1 on that. So you had that ratio, and then of course you're going up to the 50 to 1s that we've seen during 2000 to 2012, where gold would be at 800, silver would be at $16, then silver would be at $20, and gold would be at 1,000. And now we see it at a little over 80 to 1. Everybody's saying, throw your gold in and buy silver. And certainly it's unprecedented. And there's no doubt in my mind that it'll adjust back toward a 50 to 1, but not a 16 to 1, in my opinion. 32 to 1 is possible if silver really takes off when there is a bank foreclosures and bank collapses and all these kind of things that are coming down the road that we think due to derivatives will happen. But certainly gold right now could go to as much as 100 to 1, because if you look at the last 27 months, gold's gone up 27% in 2016 and 17 in 4 months into 2018, where silver's only gone up like 8% during that same 27 months. So with central banks buying, and we, just in my little company, we've seen more seven-figure sales through April this year than any year since 2008. I can tell you from our statistics. So we're seeing the big investor has it figured out. It's the little guy that's still scared to death to put his money into gold and silver where there's very little risk, and put their money into stocks where there's a tremendous amount of risk. Not to say stocks can't go higher, because they can. But certainly when you look at the price earnings ratio and other ways to evaluate stocks historically, they're at a very, very high price right now. And certainly with the Federal Reserve telling you they're going to raise rates probably 2 more times, and you sit there and look at bonds going down, and people just sitting there knowing the Fed's probably going to raise rates at least 1 more time and probably 2 more times, guaranteeing you a drop in your bonds. So why you sit there in them, I can't figure it out, but that's between you and your money manager. But anyway, I hope today helped settle, because you need to do your due diligence and find out about pricing and what your real cost is of getting in and getting out to make a wise decision how to use your money that God's entrusted you with here on this earth. So with this week's Precious Metals Market Update, this is Tom Cloud signing out.